First of all, thanks for having me. It's an honor to be here and to speak after all those great speakers. My name is Alexander Artopé. I'm the co-founder and CEO of smava. We are a company which is operating in Germany. We're based in Berlin. We are the leading marketplace lender in Germany. We are have started in the market in 2007, and we have originated close to 1 billion euro since inception so far. And we have 150 people in Berlin. And I want to give you a short overview about what marketplace lending is, because there's a lot of names and labels flying around, like crowd lending, marketplaces, and so on. And I want to give you a short overview what we think marketplace lending is. So the most important and the most common differentiation between the different models which are important to consumer lending and also to business lending around the globe are marketplace lending on the one hand, and on the other hand on balance sheet lending. And the main differentiation is quite obvious. That's the capital which is deployed on those platforms. If you look at on balance sheet lending, most of them use their own capital. Of course, it's leveraged by credit facilities in the background, but they use their own capital, and they also put their own capital at risk. And that's the main differentiation. In contrast to that, marketplace lending connects private borrowers on the one hand, and also small and medium-sized businesses to investors, where the capital comes from the investors, and the investors are also private and institutional investors. But the main difference is that marketplace lending does not hold any own inventory. And that's a huge advantage in our view, because if you have a look at the biggest marketplace in the world, to start with eBay, for example, it was the pioneer in that, and also right now Alibaba in the Chinese market. If you look at Airbnb, if you look at Uber, all of those marketplaces have one thing in common: they don't hold own inventory. That's exactly the same in the financial industry for marketplace lending. And the advantage that comes with it is also quite clear, because it means that you don't have capital requirements. In contrast, if you have a marketplace who's lending out 1 billion euro, you can do that without holding any capital, and you don't need to deploy any capital, which you normally have to do as a bank. Depending upon the country and the bank and the size, it's somewhere around 8 to 10% of the equity you need to deploy in order to be able to do that. So it's a very strong advantage that marketplace lending offers. Also important, of course, is that marketplace lending means that they don't take on the credit risk, whereas the on-balance sheet lenders, of course, have the credit risk, and therefore have a stronger emphasis on developing the risk. So, in our view, it's a more efficient model which comes to the world of banking. It's not completely new, because all the basic ingredients have already been there. Borrower on the one hand side, investors on the other hand side, and what's new, it's a more efficient platform in the middle. And one thing to the scoring, because it's also very important, the scoring, there's a lot of fuss around that, and Mr. Lieberknecht mentioned that if you look at most of the modern and the scoring companies like Creditec and so on, I think there's a lot of good things going on, but in the end, scoring is pretty simple. It's about precise data, and I don't know the proper word in English, that the data is trennscharf, so you can make a clear cut between what's a borrower to accept and someone to deny. And I think when we spoke recently to the chief risk officer of Prosper, which is one of the leading marketplace lenders, they were actually telling us, yes, the big data approach, of course, is helpful, but a lot of companies are arguing with social media in risk scoring. And he says it remembers him a little bit of sex in high school. Everybody's talking about it, but no one is really doing it. And I think that's pretty much the same if you look at social media and scoring. I have seen a lot of examples, but I haven't really seen mathematical evidence that it has a strong impact so far. So just as a side note. So if you look at the different players in the game, in the US, it's for marketplace lending, of course, Lending Club, that's the most popular one. And on the other hand, you have Prosper. If you look to Germany, marketplace lending is a little bit different than in the rest of the world. There are mainly two models. One is pure P2P players. Lendico, I think you guys are also here in the room with your booth, and also Aux Money as the most popular offerings in Germany. And this just means that private borrowers get money from private lenders, and now they're adding more and more institutional liquidity. For example, Aux Money has put on or deployed insurance company called Aegon with 150 million recently announced, and this means that the marketplace model for them is really working very nicely because it's not only the private lender but also institutional money coming onto the marketplace. And from what I know, that's also the case with Lendico. They're also deploying some institutional money there. And we, as smava, we are following a slightly different model. It's a marketplace model which also includes banks. So to say, we have also private lenders on our marketplace who borrow the money to the private borrowers. But we decided in 2010 to go a different route. We looked at the marketplace and we concluded that the main reason why someone in Germany is taking a loan is clearly, from a value perspective, the interest rate. And given that the majority of the German market is prime borrowers, most of them are asking for really cheap rates. And then we looked around and concluded that the best source of capital we can start to work together with, very pragmatic, are banks, because they have the lowest cost of capital. And the lowest cost of capital also then consequently means that they can offer the cheapest loans to consumers. And if you look at Germany, that's certainly true. And that's the reason why we also work with someone like Targobank. I'm very happy to have them as partners and originally loans through our platform. The main differentiation between someone like Aux Money and smava is that we of course, do not originate the loans for the banks, but we pre-approve and pre-screen them to them. So there's a high value for the borrower and also for the bank, because for the banks it means lower processing costs. And for example, we recently started a functionality which gives consumers a clear indication how high the payout probability for any specific bank is at the end of our application process. And that's new to the industry. To my knowledge, it hasn't happened worldwide. I haven't seen it anywhere else in the industry. So you get a clear indication, should I go to a specific lender like Postbank, or should I go to a private lender? So you can clearly see which lender has the highest probability to give me the money. And that's based on our proprietary credit scoring engine, which we have built over the past 10 years. And if you look at the international landscape, which is always good as I look into the future, you can see that also there marketplaces are starting to work with banks. If you look at Lending Club again, they started to work in the beginning with private liquidity, then institutional liquidity, and now in 2015, they actually starting to work together with banks. First of all, they took on a loan from Citibank. I think it was in February this year, where they signed a deal to take on and to deploy 150 million through Lending Club and offer that and originate that on the platform. Also, they started to work together with Bank Alliance. That's a community network of 200 banks, which will offer and originate co-branded loans on Lending Club. So that's one example in the US. Another example in the UK is Metro Bank. That's a fairly new bank in the UK. They started to work together with Zopa, which is the leading peer-to-peer offering in the UK, and they now originating loans through the platform in the UK. And given that in Germany, smava also works with a large variety of banks. We have over 20 banks now on our platform, over 50 different loan products, and we also helping banks, as I stated, to originate loans through our platform. So, and the last remark I want to make, last but not least, is why does this happen? I think one thing should not be forgotten, and that's the consumer. I recently read a survey that of the millennials as a target group, 71% are rather going to the dentist than going to a bank. And if I imagine myself going to a dentist, it's always a painful experience. I don't like to do it. And I ask myself the question, why is it? And I don't think it's because of the financial crisis that people don't like banks. It might be the case for probably older people, but I think younger people are straightforward. And the main reason they don't do it is because they don't like the experience and they don't like the products that much anymore. And that's why it's changing a lot. And I think in the end, that's what it comes down to. That's my conclusion. Marketplace lending, of course, is a new concept. It's a more efficient concept for lending money. But on the other hand, it's also enabling companies like us to offer loans faster, cheaper, and more convenient. And it means mainly mobile. And in the end, I think that's what it comes down to. Because if you build products that are really attractive to consumers, they will use it, and that's the most important thing, because in the end, consumers pay all of our bills. So I think that's also not to forget if you think about marketplace lending. All right, so this is my short overview about marketplace lending, and I'm happy to answer your questions. No question? Okay.
We'll get a question or two, won't we? You're all a bit silent this afternoon now. There is a question.
What are the default rates your investors are facing normally? Are there any default rates different from, well, when banks take out loans?
No, not really. I mean, it depends what kind of score classes you're looking at, because you can invest on our platform in 8 different score classes, which are mainly based on the Schufa, German FICO, and they are pretty much in line with the default expectations. So it's around 2%.
All right.
No more? Okay.
Yes, absolutely. With full transparency. We offer loans from all the different liquidity sources, so to say, from a functional perspective, and let the consumer make the decision.
Why should the consumer tend to decide for
Yes, the main reason is clearly the price. And given that the risk appetite of banks in specific areas, for example, like self-employed people or retired people, is not so high, we're seeing a clear trend in the German market that peer-to-peer liquidity or private liquidity with higher return expectation automatically translates into also near prime segments of the borrower market, and that's of course self-employed people, retired people, which hardly get a loan if they are, let's say, older than 70, and also of course high-risk borrowers. And that's the segments we mainly fund through private liquidity, as well as, for example, Aux money.
Sorry, I've got the mic. I might have missed this, but are you already international? Are you planning to internationalize?
No, Germany only.
Why is that?
Because the German market is very big. It's a huge new loan book every year, and I think it's a very interesting and very competitive market. And we think before you start to look abroad, you should better be a huge player in your own country. So.
Okay. Since you are not charging a margin, but you're charging a commission, right?
Yes.
On it. If you translate that commission into a margin, how much would that be?
Somewhere around 2%.
Okay.
So I'm afraid by now we have to stop. One last question, okay?
You said you intermediated around 1 billion euros. How is the split between how much did banks actually fund and how much did you really intermediate by private investors in the P2P sphere?
Well, the majority is clearly banks, but it's important to note that the private funding is still a central component of our business model.
Yeah. Alexander Artopé, thank you very much.
Thank you very much.
It was impressive.